Okay. Thank you. Hello, everyone. My name is Jason Levitt, as she said, from levittbrothers.com. Thanks for being here, and thanks to the Money Show for inviting me. So for the next 30 minutes, I'm going to be talking about the characteristics of the best stocks. And of course, I'll be talking about this from a trading perspective. If you take the best performers and you reverse engineer them, many of them have similar characteristics before they make their big moves. Okay, so I'm not talking about investing. I'm not talking about getting a list of the best investments over the last 20 years and seeing what they have in common. I'm talking about trading, buying today and selling in a few weeks, buying today, selling in a few months. Okay, so this time period is longer than a quick in and out trade, but it's much shorter than a long-term hold. It sits in the middle. It's a trade. It's what you and I do pretty often. Okay, we get in, we ride a move for several weeks or longer, and then we get out. When you get a list of stocks that have done great in this time frame, many have similar characteristics, and that's what I'm going to talk about today. So you can see my contact info on the slide. You can reach out to me anytime via email, Twitter, questions, comments, whatever you want. That's fine. You can reach out anytime. All right, so I'm going to break this talk down into three categories. Okay, one is market conditions. Two is what I'll call like a theme or a story or just kind of group strength. And three is the actual characteristics of the best stocks, which specifically come down to a price, volume, and volatility sequence. So the obvious question is, why are you going to talk about market conditions and group strength? Why not just jump right in and talk about the characteristics of the best stocks? The answer is because those other things are not just as important, but they're probably more important. In fact, they might even be the most important part of trading. So if I skip them and I only do price, volume, and volatility, I would essentially be teaching you something like out of context, but I want to give you like the bigger picture and show you how things fit together. Okay, so let's get started. So one, market conditions. Like why are market conditions so important? Okay. The reason is because more than half of a stock's movement is due to the market conditions. Okay. What's that mean? It means if market conditions are good, you could close your eyes and buy a basket of almost any 10 random stocks and make money. But if conditions are not good, even a very skilled trader will have a hard time making money. The market conditions set the tone. They're like a steady wind at your back, or they could be a headwind in your face. They either make things much easier or they make things much harder. So here's another way to look at it. This is a screenshot that I grabbed from FinViz. Okay, I took the universe of stocks and I sorted it based on the performance over the previous quarter, as you can see. Okay. When the market conditions are good, there will be hundreds and hundreds and hundreds of big winners. Okay, pages and pages of stocks that are up 100, 200, 300% or more. But when conditions are not good, this list will be very small. Okay, a lot of traders, think that when they make money, they're responsible for it. They take credit for it. They think they're great. They're going to do a victory lap. They think they've figured things out, but actually most of the time it's because the market itself is acting well and those traders just went along for the ride. Now, they still get credit. They made money. Other traders had access to the same information and such that they did, and they didn't make as much money. So the traders who make money definitely get credit, but favorable market conditions set the tone in the first place. All right, so how do we determine market conditions? So what I do is I'll take a quick glance at the indexes, but most of my view of the market conditions come from noting how individual stocks behave. Okay. Do they break out from bases or continuation patterns, pause, hold their gains, and then continue on? Do they break out, pause, and then give gains back and fall back into their patterns? Or maybe they break out and fail on the same day. They break out, run up a little bit, and come right back down into their patterns. Or maybe they don't even break out in the first place. Maybe they act okay, but they just can't build momentum and get through key resistance levels or moving averages. Okay, so the way individual stocks act will tell me what the market conditions are. Okay, I'll look at hundreds of stocks and note how they're acting, how they're moving. And of course, I have my own trades to lean on and my own watch list to lean on. Okay, if my positions are doing well, conditions are probably pretty good. But if my positions start to falter, if they can't hold their gains, if they can't follow through, the market is sending a very clear message that should not be ignored. Okay, market conditions are very important. They set the tone. They guide us. They tell us like how aggressive to be. During the course of a year, the market conditions will be in sync with how you operate, maybe 2 or 3 times. Okay, so maybe there's a 4-week stretch in January and February. Maybe there'll be an 8-week stretch in April, May, and June. And then maybe there'll be another 8-week stretch during the winter. Those are the times you want to be aggressive and make as much as you can. But the other times you want to tone things down, be more conservative. Okay, and it has nothing to do with individual stocks. It has everything to do with market conditions and what the market is actually offering you. All right, let's now move on to the next topic, which is what I call theme, story, or group strength. Okay, the best stocks tend to have a story. There's some sort of underlying theme playing out. And this leads to many stocks within a group to do well together. Okay, I said a few minutes ago that half of a stock's movement is due to the overall market. Well, another 25% is due to the group that it belongs to. If semiconductors are doing well, most semiconductor stocks will come along for the ride to some degree. Okay, if housing is doing well, most housing stocks will rally. Okay, why? Because whatever underlying theme is playing out is accessible to all the home builders. Okay, whether it's lower rates or cheaper materials or just a hot market in general, there are things that boost an industry that benefit all players. Okay, the best stocks are going to do better. Okay, we know there are going to be outperformers, and there's always going to be a few stocks that are poorly managed and don't do as well. Okay, but when there's a story in place, when there's an underlying theme playing out, every company within a sector gets to ride that tailwind. So let's look at some examples. Okay, so I got 4 charts here. So what's hot right now? Okay, I grabbed these charts from over the summer, April, May, and June, basically. What's hot right now? AI, data centers, aerospace, drones, and other stuff. So what I have here is some data center stocks. Here's NBA, Nebius, which is now up near 100. It ran from 20 up to 55 over this like 2.5 month time period. CRWV went from lowish 30s up to 175. Huge move. APLD, steady gainer, and then hit an inflection point and like went vertical. Okay, the total move was like from under 4 to 14. Oracle, which is now over 300, 120, steady riser, hit an inflection point and accelerated up, up to 220 on this chart. And as I said, it's up to 300. So data centers were hot. So you look inside the data center space and you have a lot to pick from. Once you identify that data centers are hot, you're better off going into the data center group, trading stocks that are part of the strong group rather than just randomly trading some other stock that looks pretty good. Okay, next up, aerospace was good. Okay, rockets, satellite telecommunications, etc., etc. Lots of good stuff going on in the space. SpaceX, not public, but there's a lot of public companies that have little niche plays. Rocket Lab, big winner, moved from 15, steadily rose, and then went up to 50. Blue Sky, steady riser from like $5 up over 10, and then it accelerated up almost to 30. ASTS, steady riser, and then went up, came back down, and went up again. It went from like $20 up to 60. Kratos, steady riser, accelerated a little bit. Okay, all stocks related in the same group, all doing well together. So again, when you see a stock doing well, you dig into the group, see if others are doing well, because stocks tend to move together in groups. They don't move the same amount. Some are going to do extremely well, some are going to do okay. But if you want to narrow the universe of stocks from thousands down to a handful that are playable and give you the best odds of making money, dig into the groups where there's some sort of theme playing out. Okay, drones were hot. Okay, drones at airports, like flying cars, I guess you can say, delivery drones, a lot of little niche plays within the group, but the broad group of drones was doing well. Joby, really good play from under $6, like $5 up into the teens. Red Cat was a little bit more less of a smooth mover. It did really great here. 5 up to 9, pulled back, and then accelerated hard from 7 up to 12. ONDS continues to do really well. In May, June into July did great, and then Archer did great, and then it ended up flattening out. Okay, so drones doing well. Dig into the drone group instead of just randomly playing a stock that looks great. Dig into a group that's doing great, because groups tend to move together. Stocks move together as groups, and when you play a stock from a group that's doing well, your gains most likely are going to be juiced. The stock's going to do even better. And if the stock doesn't do well, it's kind of like your losses get backstopped. Okay, they don't fall as much. All right, so with all the data center stuff and AI stuff, power and energy companies were doing great. Here's GEV, huge steady gainer from 250 up to 650. CEG from 160 up to 350. VST from under 100 to over 200. PWR, you can see the big gain, okay? All moving together to different degrees, but all participating. Better to find a group that has a theme playing out and dig into that. All right, next up. So there's a group of stocks. These are Bitcoin miners that have kind of pivoted their business models to becoming more of like data center stocks, and they went on a run this past summer. Okay, so here's iRent. Started in April, May, down near $5-6, ran up over 18, touched up at 20, came back down, and then ran up again. Huge movers. Within the same group, you got Hut stair-stepping up. Kind of a sloppy mover. Entry maybe not that easy, but because it's part of the same group, it did well too. Wolf, steady mover from $2 up to $5, and then boom, it takes off. Cipher, same thing. Steady mover for a couple months, hits like an inflection point and goes up a bunch, comes back down, tests moving average on this time frame, which is the daily chart, and then takes off again. Okay, so another benefit of playing stocks that all belong to the same theme is it gives you confidence to buy a dip. Okay, because this group again was like Bitcoin miners that kind of shifted their business model into being data center stocks. Data centers are huge now with AI. AI needs data centers. So these stocks were all hot over the summer, which is why we're going to, you want to dig into them. You give confidence to buy over here when we dip down to the 50 and 200-day moving average that you might not necessarily have. Okay? If this was just a random stock in any old group and the group wasn't necessarily doing well, you'd have a great move up here. You'd have a big enough move down here to maybe change the outlook, and then you'd be a little bit weary that this might kind of go up and roll over because this move down here was so big that this might fail. But because this stock comes from a strong group, it gives you confidence to like, hey, there's a very good chance that a dip is going to be bought. So I'm more interested. So it gets me excited about buying a dip in a stock that's doing great because the entire group is supporting the move. Okay, semiconductors went on big runs. The mega caps have done incredibly well. Now, semiconductors are a big group. There's a lot of niches within the group. Not all of them are going to do well together, but there's because there's a couple hundred semiconductor stocks out there, but there's definitely going to be some leaders. When the group's doing well, there's definitely going to be some outperformers. So here's NVIDIA, biggest company in the entire stock market, and it moved from 90 up to 180, so it doubled. I mean, think about that. You think about it, a small cap could double in a couple months. Here's like the biggest company out there, doubled. Okay, Broadcom, 140, well over 300, and it's up even higher now. AMD, 80 up to 180, so more than doubled. And then SOXL is the leverage ETF. Okay, semiconductors doing well. Dig into the group, play the leaders, play the charts that are acting the best, play the stocks that are acting the best. They tend to move together. Whatever underlying theme that's playing out that is enabling the group to do well, all the stocks have access to that same underlying theme. All right, couple more here. So with data centers being hot and AI being hot, like some alternative energy stocks did well. So here are some nuclear energy names. Oklo ran up from 20 up to 70, back down. Group was doing well, so I have a lot of confidence to buy this dip, and then it runs up again. SMR from 10, 15 bucks, ran up, came back down, ran up again. And then Lightbridge moved up, hit an inflection point, probably earnings, and then you can see flattened out. Okay, strong group, all stocks benefit. They don't all move together. There's just definitely going to be differences, but you want to find out where those themes are. Okay, gold stocks have done really well. Gold's probably in a long-term uptrend. It's going to do well for a while. Newmont Mining, great returns. AEM, great returns. KGC, just as good. WPM, same thing. Okay, same thing over and over. Find a group that's doing well. Find a group where there's a story or theme playing out, and then dig in and find stocks there. Okay, and then finally, here's just some Bitcoin names. Now, when groups do well, it's not indefinite. Okay, they're not going to do well forever and ever. They're going to go on a run for a month, for 2 months, for 3 months, and then they're going to fall off. Okay, and money's going to rotate somewhere else. So here you got Bitcoin stocks. Mara did well for 2 months here during the same time period. Riot did great. BTDR did well for a shorter period of time. Hive did well for a couple months and then flattened out, and it's been kind of messy. So a group could do well for a month. They could do well for 2 months. Okay, you still got to manage positions, but if you can jump on a move within a time period, it's great. Okay, so just to kind of sum this up, when you pick stocks, it's better to pick a stock from a group where there's an underlying theme playing out. Okay, it's easier to play a stock from a winning group that gives you a steady wind at your back rather than just some random stock. Okay, a rising tide tends to raise all ships, or at least most of the ships. So let's stick with stocks from the leading groups. Okay, this is a characteristic of the best stocks. They tend to come from the same groups. Okay, money rotates around. Groups kind of take turns being hot. So before you look at a stock, check out what groups are doing well. It really simply, it'll boost your gains. It'll backstop, losses, backstop the stocks that don't do as well. And it greatly simplifies your research time because you've already narrowed down, the universe of stocks. All right, now let's get into characteristics of the best stocks, okay, the actual specific characteristics, okay, which I call price, volume, and volatility sequence. Okay, some stocks randomly do well, okay, earnings, other news, something unpredictable or unforeseen happens that kind of lights a fire under a stock. This is fine, it's great, it happens all the time, but these stocks are mostly not playable. But don't worry about it, okay? There are thousands of stocks out there. You're going to miss a lot of them for various reasons. Don't worry about it, okay? But many of them display similar characteristics, and that's what I'm going to talk about today. The characteristics have to do with volume and volatility and the price movement, okay? In short, a stock will ramp up on strong volume, rest or pause or fade on light volume, and there'll be a contraction in volatility, like in the form of smaller intraday candles, and then a stock will rally again. It's a short list of stuff. Okay, it's not long, it's not complex. It's actually pretty simple. Let me draw this out, and then I'll go through some examples. All right, so what I'm saying here is what'll happen is the price will move up, and I'm going to be terrible at drawing this, so you'll bear with me. So price will move up. It'll be an energetic move up. Volume will be very strong. So I'm going to attempt to draw some big volume bars down here. You guys can bear with me. Okay, so we got an energetic move up on strong volume. Then there'll be a period where you have volatility will contract. So the intraday candles will get very small, or at least smaller. The price action will get very quiet. Volume will decline a bunch, okay? Much smaller volume bars. And then you'll get a move out of that. Okay, so you have a strong move up. Let me pick a different color here. So you have a strong move up, okay, on strong volume. Then you have a fade back where the stock will get really quiet on much lighter volume, and then you get a strong move up again. Okay, that's what you're looking for. You're looking for an energetic move up on volume and volatility, followed by a fade, a quiet fade backwards, preferably that holds a key moving average or a key previous level, and then there's a move out of that. All right, let's go through some examples. In fact, the rest of this talk, I'm just going to go through examples to show you what I mean. All right, so here's AMD. Here's the weekly chart. So notice coming out of the bottom here, we have strong volume here, big volume here. This candle here is smaller than the one before it. This candle here is even smaller again. This candle here is probably average size. Notice that strong volume here, but then volume drops off, okay? So we got an energetic move up on strong volume. Then we get, let me start over here. We get an energetic move up on strong volume here. We get a couple of quiet candles on declining volume. And then we get a continuation of the move. That's what you want to look for, that kind of sequence, a strong move up that shows you that, hey, traders, something's going on with this stock. Traders are getting involved. Institutions are accumulating it. There's something going on here. It's not just a technical move. There's something going on here. Then it quiets down for, it could be days, it could be weeks. Volume falls off, and then you want to play it as it breaks out and goes. Okay, here's Coinbase. Okay, a lot of this happened in this chart. So you get a strong move here on volume. You get a very quiet candle. Okay, this is the weekly chart. That's actually 5 days. So you get a really quiet week on light volume, and then you get another move. After that move, which comes on heavy volume, you get a quiet candle here on very light volume. You get a little bit more active candle with a very little net change on a little bit, on still lightish volume, certainly not as big as this one. And then you get the move happens again. So you get a strong move here, and then the stock fades backwards on lower volatility. And of course, here you got lower volume, and then you got a big move out of it. Okay, that's kind of the sequence you're looking for. You're looking for an energetic move up, followed by a quiet period where volatility contracts, volume contracts, and then you want to play the move out of it. All right, here's Green Plains. Okay, you get a nice move up here. Volume is decent here. Stock falls back. Okay, this candle here is kind of high volatility. Okay, it's a bigger candle, so it's a little bit of a warning. But then you get two very small candles. Volume falls off, and then you could play the move out of there. Okay. All right, here is Joby Aviation. All right, stock comes out of a base here, strong move up here, tons of volume. You get a quiet candle here, smaller range, volatility contraction, light volume here, certainly a lot lighter than the previous 3 weeks, and then a continuation up. Okay, now how you play this is like personal preference. I've talked for the Money Show before and talked about how I use certain indicators, RSI, stochastic, and MACD to enter positions. Okay, so I'm not just closing my eyes and just buying. To go through like a process here. Market conditions are good. There's a theme playing out. The theme is like drones. Now I dig into this stock and I see an energetic move up. I see a quiet week, and then I'm going to put some indicators on there to help me time my entry. Here's Meta, kind of a double bottom, quadruple bottom, whatever you want to call it. But we got a bottom here. Volume is strong here. Stock moves up. You get a quiet, much smaller candle here. This candle's even smaller. Volume over here. These two, we have back-to-back weeks of the smallest volume since, way back in December. Quiet pause, and then we continue on. All right, here is Oklo. All right, so it comes out of a base here, ramps up, volume huge, okay? This is a high volatility candle, so it's a little bit of a warning. You don't want candles that big on the way down. That's kind of big too, but then we get back-to-back smallish candles, volume much, much lighter than it had been for the previous 2 months. Zoom in with whatever indicators you use to help time an entry, and then you get a move out. All right, Red Cat comes out of a base here. Tons of volume over here as it breaks out. This looks fantastic. You get a high, look at this, huge volume, huge volatility. So that's a major warning, okay? Stock broke out, did great, but then fell hard right back into its pattern. That's a warning. But then we get 2 candles, back-to-back candles on, that was heavy volume, but this is tiny volume, okay? So for that, I'll still play it, okay? I'll see a stock comes out of a base, good volume, comes back down. I'm a little bit weary because of like how big this, how big that week was and how big this volume is. But as long as we get a couple quiet candles on declining volume, I'll still consider playing it if I can get a good entry because my stop is so close. All right, here's SMR, part of the nuclear energy group. Comes out of a base here, huge move up here, tons and tons of volume. Volatility pretty high here, still pretty high. This candle is smaller, and this candle is even smaller. And so we get these back-to-back candles on noticeably lighter volume. It's the lightest volume since, back here. And then we get a move out, okay? So again, the sequence is very simple. I don't have a long list of stuff. You're looking for stocks, market conditions good, some sort of underlying theme playing out. You're looking for a strong energetic move. You're looking for a fade, a quiet period on lighter volume. And then you want to look at your indicators to get an entry and try and get a good entry for the next move. Okay, I'm going to go through a couple charts here, a couple more charts because I only got a couple more minutes. I think you're getting the point. All right, so here is TSI, quiet stock here, surges, huge volume, huge volatility, huge move, stock like doubled in 1 week. Inside week on lighter volume, another inside week on even smaller volume. So quiet week, even quieter week, volume declining, and then boom, you could play the move out of there. Here is open, comes out of a base, strong move up, volume here, strongest it had been in a couple months since way back here. Volatility didn't really decline, but there's no question that volume declined here. So volume's getting quiet. Here's the blue line here is the 8 EMA. So everything's there. Stock moves up, comes back down, finds support at the 8 EMA, volume declining, and then you get a big move out of that. Here's QS. Stock moves up huge on huge volume. Then we get 5 very quiet days in a row, volume declining. Throw your indicators on there. I use RSI, MACD, and stochastic. I've talked about this again in a MoneyShow presentation. I've also posted videos on YouTube where I outline exactly how I enter. Put your indicators on there, and boom. All right, so I have a few more charts here. I'm gonna flip through each one. I'm gonna pause on each one for like 2 seconds. So if you're watching the replay of this, you could pause the video and maybe go through the motions of trying to figure out where you're, what you see. Okay, so here's Tilray. You can see the volume there, huge, and then volume falls off. VSAT runs up beginning of August, goes flat for 3 weeks, and then ramps up again. Here's Bloom Energy, moves up, couple quiet days there in early August as volume falls off. Newegg Commerce moves up, flat lines, quiet candles over here. Volume falls off, then it runs up again. And AMPX, similar thing, runs up, quiet candles, volume falls off, and then it goes up again. It pauses for a few more days, but then it goes on a big run. Okay, So to review, market conditions are probably most important. Okay, if the conditions are good, there's going to be an overabundance of great performers. If market conditions are not good, it's a challenge for everyone. So you want the market conditions to be in your favor. You want to play stocks that have an underlying theme or story playing out. Okay, the wind will be at your back. Stocks tend to move together. And then zoom in and look for like some sort of price, volume, and volatility sequence where stocks run up, they fade backwards very quietly. There's a volatility contraction, there's a volume contraction. Use your indicators, look for an entry, and because you want to play the next move. Okay, with that, I am finished. Thank you for being here. Questions, comments, whatever, feel free to reach out to me. So thank you.